Greetings from Nabo Capital. My name is Masi Njoroge Mwangela, and we're continuing with this series of Treasury Solution, where the content that we're bringing is about how can you generate passive income line from your business. What will passive income do for you? It will not only help you to build your wealth as a business, but it will help you to optimize your cash flows, generate an additional business line, which is called the investment income line, and thereby providing financial security and stability for your business. In this series, our CIO will be unpacking the investment art of how we execute a treasury solution. Tune in, log in, continue to watch this content. If you like to receive our newsletter, email invest@nabocapital.com. Thank you for joining. Welcome to the Treasury Management Series at Nabo Capital. My name is Masi Njoroge Mwangela. This week we have the pleasure of having on stage and in this conversation our Chief Investment Officer, Damitha Pathmalal. Damitha has been with Nabo for the last 2 years, but I'll allow him to introduce himself so that we can set the stage and you get to know where Damitha comes from and his experience and background. Welcome, Damitha.
Sure.
Introduce yourself.
Of course. So this is my 30-second elevator pitch. I've been a thoroughbred asset manager most of my life. I started my career working Fidelity Investment Special Situations Fund. Really learned the importance of being a generalist. Then a few years after that, decided to pursue my MBA at Duke University, which is the #1 ranked MBA program at the time. I only bring that up because it's fallen to 11th place and I'm still bitter about it.
Yeah.
And then after that, I worked for King Abdullah's University for Science and Technology endowment, which is around a $25 billion endowment. I think it was the third largest endowment in the world at the time. And then after I graduated from Duke, I worked for a blog which is quite esteemed at the time called Seeking Alpha. It had around 14,000 authors, and I was fortunate enough to be ranked in the top 3 in several categories, including economics, real estate, and investments. After around a year there, I decided to move into what was more of a long-term home for me, running a US-based hedge fund. Things seem to be going great, but you know, life comes at you fast. Yeah. COVID changed the calculus for a lot of things. Yeah. So there wasn't a lot of migration going on, but I really wanted to get experience in what's generally considered to be the toughest capital market to get under your belt, which is Africa. Yeah. So I was fortunate that I was headhunted by Nabo around 10 minutes after deciding that I should go to Africa. Yeah. And then that was that. I think around 3 weeks later, all the paperwork came in. I came to Nairobi, 2021, had a fantastic 2 days, and then got to know the country, and then on my 3rd day, started working at Nabo. And now at Nabo, I'm not sure if people are familiar, you know, we're master of many trades. As CIO, I look over many different asset classes, and this is being a little reductive, but you know, the easiest asset class is the money market, the fixed income instruments, and then it goes towards the spectrum of complexity and return on the far end, which is public equities. Yeah. So a short way of wrapping Nabo up is bread and butter combo is a little bit of everything.
Yeah, awesome. Thank you for that expansive introduction. Yeah. I didn't know some parts like King Abdullah's endowment fund being the 3rd largest in the world, but yeah. I think what that means is you come with a wealth of experience and having worked in even more advanced markets, yeah. And you've been able to perform well at Nabo. Nabo's ethos is goal-based investing. Our ethos, investing with purpose, allows us to tailor portfolios to meet client needs. And in this series, we're talking to corporates, large blue chip entities, about treasury solutions, because our research has seen that a lot of businesses here in Kenya are actively generating their revenue streams from active income. So if you're in FMCG, you're in the business of selling, distribution. If you're in manufacturing, you're in the business of manufacturing. If you're an NGO, you're in the business of really funding projects for good, but then the bulk of your capital is being funded. The bulk of cash flows for most of the blue chip companies is actually coming from an active income line. So this series really is about unpacking how these businesses can begin generating a passive income line, investment income, which is what we do at Nabo. With that in mind, please explain to our audience, when you're tailoring a treasury solution, a portfolio that wants to meet treasury needs, you know, I'm operating a cash flow in and a cash flow out, what is it that you look at, and what is a treasury portfolio composition constitutive in your mix?
Thank you for the question. I think, you know, if this question was multiple choice, it would be all of the above. You know, the first thing you start with the treasury solution is really looking at their cash conversion cycle, when cash comes in, when cash goes out. And that really determines the optimal amount you can allocate to certain assets. So for example, if your business has a 15 very short cash conversion cycle, or very, very long payables, receivables, these will all change the picture. So it's a juggling act. But the other mandate that the treasury solution should have is that yes, it's cash that's coming into the business. So I think certain folks make the mistake of thinking of it as house money or free money. But there should be a cost attached to it. And that cost should be your cost of equity. So whatever the treasury solution you come up with as an asset manager has to beat that number. And that's where the economic value added really comes in. And then there is the third prong, which is my favorite, the creating a series of cash flows that's uncorrelated with the business and the macroeconomic environment. I'm sure, well, I'm not a CFO, but I'm sure there's a lot of CFOs out there who know that there's been a bad year in business. And I think it'll be hard to find one who hasn't. So what you want at the end of the day, aside of the nice to haves that I mentioned, is that, you know, if your business is having a bad year, which means that the cash inflows are not as great, that investment portfolio, that a treasury solution, should not also be having a bad year. Correct. Yeah? So what we like to call that is uncorrelated cash streams. And that's really what we're trying to create when we make a treasury solution.
Excellent. Thank you. Thank you, Damitha, for that. Lots to learn. Is this where the unrelated cash streams from the normal day-to-day business of the company, is this the element of diversification of asset class, market diversification? You look at the macroeconomic factors, you're looking at the operating environment. And if we could take an example, we've just come from the post-pandemic recovery after 2020. But our recovery in Kenya took more of a W curve.
Yes.
Yeah? Because as we were recovering, we got into an electioneering period, and then up we went again, and now we're seeing our Kenya shilling strengthening against the dollar, which is unheard of.
Yes.
Yeah? So what are some of the nuggets? What are some of the opportunities you see as a CIO that you like to bring to the attention of our CFOs or CEOs that are watching this series with regards to optimizing their cash flows in this recovery phase, post-pandemic and the W recovery?
Thank you. That's a great question. So, you know, the way we'd like to approach a portfolio, especially a treasury solution, depends on certain factors. And I'm bringing this up because it's somewhat important. The Kenyan shilling has appreciated dramatically. Some say too much. I won't say where my feelings lie on it. But in all of our portfolios, especially our treasury portfolios, these portfolios composition match the end business needs of the CFOs, right? And that's something Nabo does differently than other asset managers, right? You give money to, and I worked in loads, you give money to an asset manager and they'll say, you know, what's my job? My job is making as much money as possible. But really, with the Treasury solution, what you're trying to do is make as much money as possible in a way that has a business end use, right? So some of the things I would mention to CFOs is, yes, diversification, being exposed to different asset classes, absolutely. But of course, it's also kind of like going, I often compare this like going to a doctor. You could be a brain surgeon and you could be the world's best brain surgeon out there, and you might know your business better than anybody else. If you're a CFO and a brain surgeon, right? In that rare case. And you might even recommend to your friends that, hey, you should go and see this brain surgeon if you have a headache, right? But the second your friend who's a brain surgeon tells you, you know, my head hurts, I think I'm going to do brain surgery on myself. That's when you start running out the door. And that's where asset managers really come in. Human beings tend to be risk averse. And we are especially bad at making those judgments when it comes to our own financial health, as well as any factor that where your ego somewhat filters in. So there's certain professions that, especially when it comes to treasury, especially when it comes to asset management, you know, I'm outside of consensus where I think that you should let a professional handle it.
I hope this has been an amazing conversation, life-changing conversation to be precise. And I hope that this message gets to as many CEOs, CFOs, general managers, and business leaders out there. And for me, there is only one challenge that I want to throw to all of you who are listening my voice. How much investment income do you have amongst your revenues? What is the percentage of investment income contribution to your revenues? And I would say this, every business needs an investment income line. So I want to say, if you feel this speaks to you, please reach out to us at Nabo Capital. We will be more than happy to sit down with you to explore all the options, all scenarios, and come up with a plan of how we can optimize your investment income line. We can introduce an investment income line to be one of the contributors to your revenues and insulate your business from the turbulent times that we live in. Thank you very much for listening to me. I look forward to engaging you further after this conversation. Thank you, and God bless all of you.